the S&P 500 and the Nasdaq 100. We're going to be going over exactly what is happening here on the market, where we are right now. We continue on this uptrend. We're trying to break out of this year-long downtrend, and this is the news we need to be talking about and everything in between, so you're ready for tomorrow. Now, as we look at the market right now, a few bullet points of what we need to be talking about. We have Intel earnings right now. They did miss. We're going to go over those here in a second also. You can see that we're down from 30 all the way down to 28 right now. Not a huge drop by any means, like 6%. The call will definitely have a little bit more impact here as well. You're going to get those numbers at Earning Whispers. You can see it was a pretty decent miss on EPS. And then the revenue reported at 14.1. So that's where we are on revenue. Now, when we dive in a little bit deeper, we're going to talk about Nasdaq. This is where everyone cares about. This is what everyone comes to the channel for. It's all about indexes. Now, before we dive into this, I want to go into a little bit of detail of what we do here if you are new. We try to go over specifically the indexes and then underlying equities that we find useful or find the best opportunities. Now, going into this week, all into Intel's earnings, we loved chips. Now, we knew chips would get a decent move from these earnings. We're already seeing some of those being affected, such as AMD. It's down about 1.8% right now. We can also see with NVIDIA. Where's NVIDIA right now? We can see it is currently at 95.92. So it's down a little bit. I think closed the day around 97. So those will be affected by AMD's earnings. So we need to be watching those even in the after hours with the call that comes from that. Now, going a little bit deeper, when we look at the Nasdaq and we start to look at what's happening in the grand scheme of things here. When we zoom out here on the daily, what do we know? This is the year-long downtrend. But the big thing we're watching is this blue line right here. We haven't talked about this in a while here for the Nasdaq, but it's 100 SMA. And you can see we had one test back here in February, then we had another test in March, and we did not test it again until right now. So it's essentially been about 10 months since we have even tested this 200 SMA. And you can see right now we are trying to get a hold on the day above it. So today's probably one of the most influential days. Now, when we go over something like ES, you can paint even a better picture of what's happening here. We can look at that 200 SMA. We were above it in March. We broke back below, rejected in April, then came back. We had multiple tests and a lot of rejections. But now when we look at these charts, right, we can get rid of some of this so you can see a little bit more clearly what's happening here. You broke it above, you came back down, broke back, mounted, and now we're pushing up. So when we're looking at the indexes, they're showing a lot of strength. Now, before we go deep into the technicals of what's happening right now and what we should be looking for, a few things that we've mentioned when we're looking at potentially getting bullish on the market or getting a better sustained rally than what we had in October through December, basically. In my opinion, what you want to see is what's happening now. We've said this a lot here on the channel. You want to see tech doing all the leading, right? And people, again, what I recommend doing is just watching what happened on previous, overall moves. Basically, since around, I want to say August. Since August to now, the big leader has been the Dow and ES. The Dow being the main one. You can see that most of the rallies have been sustained through the Dow because of those earnings and how they performed. We have Caterpillar, we have Boeing. Those are all big stocks that are, Caterpillar broke all-time highs. Boeing broke a 2-year downtrend, right? So we need to understand that's where a lot of this movement was coming, and then not to mention energy, which just remains at all-time highs. So these are things we need to be looking at and focused on and what's changing in the market. Why do we need to be watching tech? Because what got us to our strongest markets, what sustained the best rally from 2020 to like 2021, the end of 2021? It was tech, okay? Tech was the leader, right? That's what, had these crazy growth on Upstart. We had Affirm, we had some of these, I'm thinking mid caps, but remember these massive games, Roku, all these names, right? And you're seeing a lot of these mid caps even start to spike also. But you're seeing the big ones as far as the big six, what we like to call here. We go over here, you can look. This is like 6 of the biggest names in the market. We have Apple, Microsoft, NVIDIA, Google, Amazon, Tesla, right? And I just want to give you a visual of what's happening here. So if we look back through basically October through December, what happened? You just range traded back and forth, not too much movement. But what's happened since essentially the beginning of January? A massive spike across the board in tech. Okay, we have not seen this type of rally here in tech and the big names, the big 6, if you will, since way back here in July. So this is food for thought and things that I'm looking for. Now, I have to acknowledge where we're at here. And again, this is basically like a mini ETF, just lumping all these together. You will notice they do. It's funny how they just line back into where we're at. But you can see we are coming into a pretty big inflection point. So again, this is why I think looking at the Nasdaq where we're at, is so important. I don't think it's a coincidence that the 200 SMA is right here also. So again, what do we need to see? We have earnings coming up next week. We're going to have Amazon. We're going to have Apple. We have some big ones coming out next week. We need to see how those perform. Those could definitely lead into a sustained move to the upside. Now I'm going to stop right here before I go too far. I'm going to say right now, I do not believe inflation is done. I believe there's some very key aspects that probably will come back and bite us in the butt. But what do we have to do here? We identify short, then we identify longer term. Short term, 1-2 weeks. Longer term, 1-3 months. And again, I know you're just like, Tyler, that's not long-term trading whatsoever. I agree. But I'm thinking about you, the viewer, right? My job here is to identify the audience and what they are looking for here. So you, not maybe you watching the video, but one of your colleagues watching the video, of the 90% that are here, most of them are interested in the short term. So I have to really break down exactly step by step. So when we look at the grand scheme of things, what have we been talking about for the past 2-3 months? We expect a 0.5 hike in December. We expect a 0.25 coming in February. Well, now that's being priced in. So this adds a whole different metric of things we have to be looking and concerned for. Now, so going into tomorrow, few things out on indexes. We want to see how do we hold around this range. Very, very important. If we continue pushing, I think we hit 12.2 in a hurry. Why 12.2? It's our swing high from December 13th. And I do think it's going to be very important. That was our last CPI that we had previous to this one we just recently had. Now, if we go into around the 2-hour time frame, let's talk about what's happening here. I was talking about this yesterday. So far, every dip that we have has been sustained through, if you will. When we're looking at the market, we're just scaling. You can see the chart, we're scaling up and up and up. And when we're looking at this, we have to consider what's happening. It's very simple. And again, I try to repeat this in every video so you can understand and get a better viewpoint. So we can see just some of these local highs of where we're at and where we're moving. You can see we'll push up, we'll mount, 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 right? So we had a big sell here, which was worrisome, but what had to happen? We had to break below 11.3, which we couldn't do. And then we even saw a nastier dip almost a day ago right here to 11.6. And then what happened? Immediate buying this time. So we're seeing buyers react very quick, which hasn't been the story. If we go back and we look through December, we look through, you had some decent bounces back here in November, like one, but this was not sustained, right? None of this was ever sustained to the upside. This is definitely a lot more sustained in a clear channel as well. So when we look at this, these are just things we have to be kind of identifying as we're moving here. Now, what am I going to say right now? As we're getting into this range, this is a dangerous territory. When we go to the 4-hour time frame, I'm going to show you where we're at. You can see this range here has been tested. Has been tried. It is a massive range on the Nasdaq, right? We can come all the way back and see how we've rejected once, twice, 3 times, 4 times, 5, 6, 7, potentially 8. So we have to be ready. On top of that, also, we have the 200 SMA. So these are things we need to be looking at. You got to be vigilant. You got to be watching these right now. So when I'm looking at this, I'm definitely keeping my head on a swivel and not just, blindly running into calls. That's why every single day, what do I say? I say go into each day liquid right now. That's my plan. The goal is to continually go into each day liquid on my day trading account. Why? I'm not trying to go heavy into swings. I'm not doing any of that mumbo jumbo. There's no reason, because you're going to expose yourself to risk unless you have leaps, okay? The IV's going to kill you. It's going to be dangerous, right? That's going to be the danger unless you're deep in the money, right? So you need to understand that. Very whipsaw. We've had some pretty big traps, if you will. We had a bear, in my opinion, a bear trap yesterday. We had a nasty sell-off and then fall through by buyers. So these are things we have to be looking for. Now, I want to go over SPY to give you a little bit of a visual here. I think SPY has been maybe one of the easier charts to be watching for. And we've had basically the same reaction. So I want to show you really quick here. We're going to go to the 15-minute, and I just want to show you. Let's identify the past 2 trading days. What's happened in the first basically hour, 30 minutes, give or take, of trading. Yesterday, we start off with, you would consider this a bear flag if it was, we had that going on, but we did not. We just had like a little bit of a downward channel. Downward channel start the day. What happens? Pop right back up, right? What happens today? Downward channel. We break above, mount VWAP, 90 MA, we don't look back. Back-to-back days, we're seeing this. For me, this just shows the overall strength that we're seeing from the bulls right now. And yes, I agree, there are no specific bulls or bears out there, right? I'm just trying to give you a visualization of what's happening so you can identify that as well. That's what helps me when I'm looking specifically at volume, so I know. Again, I try to make this as simple as possible so you can actively use this every single day. You shouldn't be using this channel as, oh, a signal that we're going to go up tomorrow. That's not how we should be looking at it. You should be looking at it to learn the tools that we're using here as far as supply and demand, price action, volume, fundamental analysis, everything in between, because we're trying to give you as much as possible. So you need to understand that also. So when we're looking here, these are areas you have to be looking. And we continue to mount over previous highs. It's again and again and again. And we just see it time and time. Yesterday, we ended the day right above the previous highs here. Then what happens again? We mount above today. The local highs that we have again and again, stair step, stair step, stair step. Again, we haven't seen continuation. That's been the concern for me. And now we're finally seeing it. Today, for instance, today was, in my opinion, a sell heavy day for the first basically 2 hours and 30 minutes. What happened there? So today's volume did not come out too aggressive, if you will. We're at 70 million, which is honestly mind-blowing to me. We'll probably end closer to 75 by the end of the power hour. But again, about 35 million of that came before around 11 a.m. Central. So I want you to, 11:30 give or take. I want you to visualize that. You're getting about half of your volume in the first 2 hours of trading, 2 hours and 30 minutes, and most of it is pushing you down. However, you can't crack any significant levels. Again, the past 2 days have set up for bears to be able to push you down, for sellers to try to dominate. However, again and again, we start to see this, point in case be proven that buyers show up when it matters, and now they're trying to fall through to the upside. So this is what I'm liking when we're looking at the market overall. Now, when we start to look at overall targets and looking at some new supply levels, right? So this is what we need to talk about. Yesterday, what did I mention? 404, 405, that was our next supply range, right? Guess what? We got there. Have we invalidated it yet? No. Our next range after this, we have to come all the way back over here. It's going to be roughly right here, 408 to around 411.5. It's a bigger range, but this is what happens. This is where we were at. This was your range that you can see from September 12th, I do believe. So that's where we're going. We've been rejected once, twice so far, going back into December. I do believe we will get a test of that. That's what I'm looking for right now. However, again, before I even go any further, what do I always say? I'm liquid on my day trading going into tomorrow. I watch what happens and how we react from open. That's why I recommend following on Twitter. And this reminds me, if you're not liked and you're not subscribed to the channel, I have to recommend you do so. Look, every single day I'm giving you the charts. I'm giving you the data. I'm doing exactly what I'm doing right now, breaking down everything. At the end of the videos, when I go over all the stocks I'm liking for the next day and trying to find the best place for you specifically. Now, I'm going to tell you whether I'm bearish, bullish, whatever it may be. And every single day, you're going to get the truth of me. I'm going to tell you if I lost, won. Again, ask anyone down in the comments. It's Tyler posts his losers. I try to be as transparent as possible because if you want to learn how to trade, you got to know how to lose and you got to know how to cope with losing when it comes to trading. Also, let's get back to the video. So when we look here, that's what I'm looking at specifically. Nasdaq, what did we say? We were targeting the 200 SMA. We hit it. If we can get above 12.2 in a hurry, I think that's going to be the next target. But I think personally, if we break above the 200 SMA, I think we are going to easily push through that 12.2 range. I'm going to tell you right now. If we come out with bullish momentum, that's what I'm looking for. Now, a little bit deeper. Let's talk about some stocks I'm liking, okay? Some stocks that we're liking out here. Now, we've gone over the big six things there. What were we liking into today? We were liking a lot of chips. We got that big move on chips, right? What did we talk about yesterday, right? Boom. We had that bull flag formed on AMD, popped up, went to we opened up at 77. Gains all across the board. Now, what are we looking for? Right now, favorite play. Come on, get out of here. Favorite play right now, Target. I love where Target is personally. Now, let's talk about the associated risk. Target, we're going to go to the daily. We're going to zoom out just a little bit. I think we need to go further. Nope, the daily's fine. This goes all the way back to locally October 16, 2020. You see right there, the SR flip right there. Come back through. Rejection, 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 mount, push. You can see all this key level here. Now, we're trying to get above it and mount it in the after hours. If we get continuation, I do think we're going to go up. I do believe so. So what I'm looking for is continuation on the market into tomorrow and specifically playing what's happening here. Now, tomorrow morning, we get some really interesting data. PCE comes out tomorrow. We need to be looking out for this. We need to be watching. Forecast is 0.3. As long as we come in at forecast, I think we're fine personally, my opinion. But there's potential possibly to come in lower than this. Why? In my opinion, based on CPI and PPI, because those keep dropping, I have to look for this to follow suit. Now, that being said, everyone understands my viewpoints when it comes to inflation data. I think it's all pretty manipulated. I think the only area that's really honest is what's happening with energy, but inflation really isn't dropping that much, in my opinion. So I'm just saying right now, I kind of am on tilt with this. However, I do believe I don't think it's gonna beat. I don't think it's gonna come out at 0.4, my personal opinion. So I still think you're fine there. But if PCE comes out lower by chance at 0.2, it will strengthen even further, in my opinion, what's happening with Target. And I think Target has plenty of room. You have a daily gap all the way to 172 and another daily gap at 177 roughly. And then if you zoom out even further, you can see you have an even bigger gap all the way up to 205 and then up to 209. These are on the daily time frame as well. That's the most important time frame to be looking at gaps. I don't care about any other time frame. Looking a little bit deeper. Again, I don't want to get too crazy here. I really don't, okay? I don't want to start swinging for the fence. I don't want to start getting off track of what we like. However, Square, I'm not going to lie. This thing has become one of the golden gooses, if you will. You've mounted your 200 SMA. You had a really steep, descending wedge. You broke above. As we look at this, as we look at on higher time frames also, I think you're looking potentially for a big breakout. You're still trying to push up. You're making higher lows. A little bit off of an ascending triangle, but if you start to break above 83, 84, I believe you have upside to around the 92.5 region. And again, I don't really mention some of these mid caps lately. However, there's a few of them that I am starting to like. You have to make sure the options volume is there, but I still like Square a lot. Probably the biggest curveball I'm probably going to give in one of these videos as of recent. Next up, I do want to talk a little bit about, and again, I'm not going to go too much into semiconductors. I love them still. I'm still a really big bull in semis. They're just extremely strong. But I'm going to tell you, I'm not going to go too much into them today because I've done so much views of them lately. I like Microsoft still. A lot of people, right? Microsoft, bad earnings. People were like, oh my God, Tyler, what happened? Microsoft. I'm like, okay, whatever. But guess what? All those people that talked about Microsoft being bad, they're all real quiet as we watch this chart. See, for me and what we do here is I let my work do all the talking, okay? We let the work do the talking. That's what you do. That's what athletes do. That's what people that are professional do. They let their conduct and their integrity and their work prove it. And every single day, that's why I come here. Honest every day. I show wins, losses, everything in between. Microsoft right now, I will say, this is an interesting play. If you come out to the bearish side and you start seeing some selling, I think Microsoft downside is nice. You are in a clear-cut supply up to 249, 250. If you get above 250, okay, you got to know this. If you start breaking highs right locally here, 250 roughly, a little bit higher, you have illiquidity. I'm going to tell you right now. And you have a clear shot, in my opinion, up to 256. So what am I looking at? If you have downside, some sell side in the morning, what are we looking for? Microsoft downside, right? And you have you have quite a bit of room down to 245, possibly even lower depending on how strong the selling is. If you break above 250, right? We're looking for 256, 255 roughly. A lot of upside potential there as well. I like Microsoft, great volatility, great volume coming in here also. Last one, Apple. I've been a big bull here. I've been trying to tell y'all. I posted the bull flag here. We got the breakout. We're coming into supply now. I'm looking for a test of 145.5 up to 146.5 roughly. That's my range. That's what I'm looking at. These are stocks I'm liking. If you have questions, comment down below. Have a good one, traders. I'll see you tomorrow.